important and big IPOs open for subscription today, and it is going to be interesting to see the kind of subscription trends these companies enjoy. Now remember, both of these IPOs are actually an OFS, which means that both of these companies are actually an offer for sale. There is no fresh issue of equity shares, which basically indicates that the existing promoters, existing shareholders are looking to get listed onto the stock exchange in order to pare down their stake as far as the companies are concerned. The first one is a company called Clean Science and Technology. Now this particular company is looking to raise close to 1,546 crore rupees via the IPO route, and the route that they have chosen is OFS. Now remember, the price band of the issue is between 880 to 900 rupees a share. The IPO is entirely an offer for sale by existing promoters and existing shareholders. What does the company do? The company manufactures functionally critical specialty chemicals. It also manufactures performance chemicals, pharmaceutical intermediates, as well as FMCG chemicals. The company's customers include manufacturers and distributors in both India as well as abroad, and in fact, international markets include China, Europe, USA, Taiwan, Korea, as well as Japan. Another important thing to note is that nearly 2/3 of the company's revenues comes from exports. So clearly an export-dominated company in terms of its revenue, in terms of its top-line sales mix. The other company is a company known as INFRA. Now the company is looking to raise close to 963 crore at a price band of 828 to 837 rupees a share. What does the company do? The company is an EPC player with presence in 15 states. It undertakes road projects in UP, Bihar, as well as Madhya Pradesh. Projects are generally done on an EPC as well as a hybrid annuity model. Order book of INFRA is at 19,000 crore as of the end of March. Order books represents 2.4 times the company's FY21 revenue of 7,844 crore. When you're talking about this particular company, FY21 revenue growth was at 3%, highest growth in the sector. Revenues are second only to Dilip Bilcon with revenues of close to 7,800 crore. FY18 to FY21 revenue growth was at 34% CAGR, PAT growth at 32% CAGR in the last 3 years. When you're talking about the EPS, it came in at close to 98.3 rupees a share. Net debt of close to 3,600 crore, net debt to equity below 1 times. The company also enjoys margins of double-digit margins, and remember, valuation, when you're talking about it at this point of time, it is cheaper compared to its listed peers. Interesting to see how investors respond to these two offerings in the trading session over the next couple of days.